Okay, let's get a bit more analysis from our business reporter, correspondent, Victoria Fritz. Victoria, I suppose one of the things that leaps out from all that is the suggestion that interest rates could be going down soon.
Yes, it does seem very likely, doesn't it? I mean, he did state that it was his personal opinion, and this was not, of course, the decision that had been taken by the entire Monetary Policy Committee. They are yet to meet, but he certainly said that monetary policy easing, he says, is likely required over the summer. We will get that first assessment by the MPC on the 14th of July. We may see a rate cut. Just to remind you where we are at the moment, it's 0.5%. It's where it's been since March 2009. He also said that in August they would be looking at the further range of instruments, they said, at their disposal. Now that sounds an awful lot like quantitative easing, and just to put that in a little bit of perspective, the last time we got any kind of easing at all from the Bank of England, which we have behind me, was July 2012. In the meantime, we're going to have more liquidity, weekly auctions, he said, of liquidity insurance right through till the end of September. Just remind you where we are on that. On Tuesday we had the last auction, and it was twice oversubscribed by the bank, so there's a clear need for liquidity in the markets. He does say that we are an economic post-traumatic stress disorder for households, businesses and markets. Now, just to get a little bit of analysis on all of this, I'm joined by James Bevan, who is the Chief Investment Officer at CCLA Investment Management. James, your initial take, do you think we're going to be seeing a rate cut in July and QE in August? Is that your take?
I think if Mr. Carney gets his way, that's exactly what we will get. However, he has said that this is data dependent. In other words, he really wants to see how things pan out. And there must be a chance that he says, when we get to July and August, no, I don't want to cut rates. It's somebody else's job. I need politicians to sort out a deal, to get confidence up. If confidence rises, we don't need a rate cut.
How effective can Mark Carney be as a stabilising force for Britain over the summer?
I think it's immensely important that he provides credit and liquidity to the market. That will allow the commercial banks to continue to lend. The commercial banks continue to lend. Businesses can continue to operate.
And in the absence of anyone leading the fiscal policy side of things, I mean, can he really do that much? Can he really provide the stability that's required?
Well, you know, I think when one looks at the economy, one underestimates the importance of the corporate sector and the household sector. And the corporate sector in particular is receiving very significant support from the relative weakness of the pound. Anybody engaged in export, anybody selling overseas will be getting much bigger sterling receipts on the back of the weaker currency.
But lots of people suggest that that might just be a short-term boost, that actually it's going to be manufacturers running down their inventory, and a lot of small business owners over the coming months are going to find the cost of imports increase. That means increased transaction costs for them.
Certainly import costs are going to go up, and therefore the real issue that will determine whether the recovery that we might observe in the short-term profits will stay is going to be down to confidence. And I would say that Mr. Carney's speech today is partially aimed at ensuring we have more stability, we have more confidence, we therefore build a foundation from which growth can generate.
James, who do you think is going to be his opposing number in the Treasury? Do you think we're going to see Chancellor George Osborne stick it out over the summer?
I think Mr. Osborne is a steady pair of hands. I think that he will be a popular choice to steadying the ship as it is at the moment. I think any immediate change will be taken very badly because of the natural change of direction that would be implied by a new member.
In terms of market reaction to the speech, it was absolutely fascinating to see what was going on. Sterling fell 2 cents against the dollar as soon as he started speaking, and we saw the FTSE rise about 100 points in the first 10 minutes or so. Is this what the market was hoping for?
Well, the FTSE, of course, has 70% of its earnings from overseas, so any weakness of the pound is immediately good news for FTSE 100 profits. What will be really interesting is to see what happens to the smaller and mid-cap companies over the days ahead as people digest the implications to the domestic economy. And there I do think that he has made some very important and interesting points. One is that he is all about stability, but secondly, it is still very difficult for a central bank to move the needle on activity if we don't get more confidence.
He was quoting Tim Geithner in there. He said, "A plan beats no plan." He seems to be the only one with a plan.
I think Mr. Carney has done an absolutely outstanding job as Governor of the Bank of England. I think his critics do not recognise how challenging it is to lead a bank when the politicians are not on board.
Okay, James, we're going to leave it there. Thank you very much for your time. Now, he said, of course, he's going to be taking any action that is required to support growth in this country. But he said, and I'll quote you this, an uncomfortable truth is that there are limits to what the Bank of England can do. The MPC, the Monetary Policy Committee, cannot immediately and fully offset economic implications of a large and negative